And on Tuesday, MBS were up 34 basis points, real early stocks down 23. The 10-year was down 10 basis points right away in the morning. Bonds improved overnight in a move that began yesterday evening after First Republic's weaker earnings announcement. A glut of buyers at the EU Open helped extend those gains. The FHFA Home Prices Index came in up 0.5% month over month. It was 0.2% previously. Case-Shiller home prices month over month came in at 0.1 versus a negative 0.4 forecast. New home sales rose 9.6% month over month in March, but were down 3.4% compared to a year ago. The median new home price was $449,800, which was up 3% compared to last year. We also got the Philly Fed non-manufacturing index, which came in at negative 22.8 on a negative 12.8 previous. Again, bad news is good news in terms of inflation. Consumer confidence fell in April according to the Confidence Board compared to last month. Fewer households expect business conditions to improve, and more expect worsening conditions in the next 6 months. They also expect fewer jobs to be available in the short term. April's decline in consumer confidence reflects particularly deterioration in expectations of consumers under 55 years of age earning $50,000 and over. First Republic's weaker earnings set a tone in the overnight session as debt ceiling drama continued to raise questions in the background, combined with several other factors of lackluster earnings and a general uncertainty caused by the ongoing rate hikes despite signs of economic cracks. The bond market had enough risk aversion sentiment to fuel a rally. That narrative remained fairly steady throughout the day, with stocks and especially bank stocks correlating to a drop in bond yields. So at the end of the day, MBS closed up 27 basis points and stocks lost 65 points. At 100.88, we are up in this range right there, very narrow range, which is bordered by the 200-day moving average as a ceiling, which we tested today, but it failed. And then we have a convergence of 3 different floors, those being the Fibonacci at 100.758, as well as the 25-day moving average and the 200-day moving average. So very strong floors there, which we also tested a little bit before ending the day, like we said, at 100.88. First Republic Bank is down 30% in the morning after disclosing $70 billion in deposits fled the bank in the first quarter. That was a 35% drop. The bank has suspended its dividend of its common and preferred stock and is taking steps to reduce expenses. We also got agency mortgage REIT AGNC Investment, which reported first quarter earnings yesterday. MBS spreads widened a touch compared to the end of 2022. However, they remain tighter than the end of quarter 3 2022, which represented the widest since the 2008 financial crisis. Tangible book value per share fell from $9.84 to $9.41. AGNC so far has managed to maintain its monthly 12-cent dividend, while just about every other mortgage REIT has been forced to cut theirs. The CFPB said it is working with financial institutions to notify consumers of its February 14th breach, in which a now former bank examiner sent supervisory information on 45 institutions and personal identifiable information on 256,000 consumers at 7 institutions to their personal email account, but they have not notified those people individually yet, which is kind of funny because if another institution did that, they would have fined themselves by now.